Hello everyone and welcome to this special weekday Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising, with Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters across the franchised and independent dealer sectors.
Hello and welcome to this Motor Trade Radio weekday special. We're delighted to welcome back Jeremy Yea, Senior Valuations Editor at CAP HPI, and he's joining us for his roundup of how trade values performed in January. And just to provide some context, when we spoke to Jeremy last month, he reported that December was showing signs of a return to some form of seasonal normality following several months of stability for trade values, which looks set to continue into January. So we're about to find out if that was the case in January. So welcome back to the pod, Jeremy.
Hi Curtis. How are you?
Yeah, I'm very well indeed. Thanks. Very well. I'm glad the weather has improved. Certainly since those storms that we saw throughout January.
Absolutely. I think it's been a difficult period for some. We haven't, where I live, I don't get too much of the weather, but I can imagine that people have had some significant weather.
Yeah, if you're over in New Orleans at NADA, yeah, I think it was 30 years since the last had snow or something. But anyway, yeah, right. It's that caused a few challenges for those that ventured over to NADA. But no, it's great to have you back on, Jeremy. I hope you had a nice break, and it probably feels a long time ago now as we move very quickly through the month of January.
Absolutely. It feels longer than a month, but it's gone quite quickly, if that makes any sense at all.
Yes, it has. So, as normal, as Curtis said there, let's get on to some of the content behind this month's editorial. And as always, before we start and we clear up an industry myth that trade values go up in January, what your view of that movement into the month of January from December and then now as we move forward?
Well, the book dropped. Live movements dropped just 0.1% overall from start to finish. So January's live values into February monthly product, and the average movement is a 0.2 drop. It is a myth. I think people believe that values generally go up in January. They don't. They tend to go up through February's live movements leading into March book. And that's when we see, some more activity towards the back end of January and definitely into February. And that's been a similar case this year. It's been a good start, I would say, to January, but it didn't really come out of the blocks flying. I think it's been as we probably thought it would be, and as predicted, it would take maybe 2 or 3 weeks to really get going. And I think we're just seeing the signs of that now.
And what were the actual figures for the January movement as we move into February, and what did the month feel like, as you say there, start a little bit slow to start, but how does it compare to previous Januaries?
Yeah, so down 0.1 of £60 at 3 years, 60. As I said, the average movement is down 0.2 over the course of the years. If you look at historically, in terms of previous moves, last year was exactly the same, down 0.1. In 2023, it went up 0.1. And in 2022, it's flat. So these last 4 years have been very, very close to each other in terms of, the overall movement. If you go back pre-COVID times, the downward movements from January to February have actually been a little bit stronger. So in 2019, I think, where a lot of people compare against in terms of a normal seasonality, a more normal year before, the world changed beyond recognition, that went down 0.7. So, yeah, we've seen definitely a period of stability through the last few years, and this didn't feel any different to, like I said, the last 4 years.
And you say that, that point of, big starts the year, but I think you were just alluding to there that the month kind of slowly progressed as we went through the month of January, because you're looking at this from a day-to-day basis as the value in the market starts to wake up through the month of January.
Absolutely, yeah. We're looking at it on a daily basis and looking at many cycles of vehicles per day. There was some positivity for some areas and there was some negativity in others, but overall it just gradually got it was sort of steady, I would say. I think it dropped 0.1 at the beginning of January and was almost 0.1 all the way through. It did drop to 0.2 but then recovered back to 0.1 again. So very little movement in terms of the overall movement, but lots and lots of moving parts and very mixed picture within the detail. But as we say every month, that's always, the devil's always in the detail.
And Jeremy, looking at age bands, did you spot any notable trends over the course of January?
Yes, so it's the older vehicles, which they're the ones which turned into a positive movement. A 5-year 80, that was at 0.4, or around sort of £10, so very negligible in terms of a pound movement. 10-year vehicles, 100,000 miles, they increased nearly 2%, or 1.6% overall, and again around £60. It's the younger vehicles, the 1-year point, which was down 0.3. Or down around about £150. There's a little bit of price pressure around there, so that's what we noticed in terms of the age bands, anyway.
And how did the various vehicle sectors perform?
So, coupe cabriolet was the strongest sector that rose 4.1% overall, which is pretty surprising, really, given it's January and the bad weather we've had. Appreciate it's a small sector now; it's a dying sector. Not too many OEMs are making those type of vehicles anymore. So the scarcer they come, I guess, the more demand they've been in, and with people hoping that, I guess, dealers hoping that the weather's going to pick up in the not too distant future. So always, potentially a good bet. If you look at some of the mainstream sectors, I look after the lower medium sector, which is the medium-sized hatchback sector. That increased as well, 0.2. If you look at city car, that went down by about 0.2. And if you look at SUV, the largest sector and by far the largest data supply that we see, certainly at 3 years and younger, that went down 0.2 as well. So everything's pretty stable across the board.
And looking at fuel types, and we always look at the fuel types, but I think there's probably some optimism and positivity around it. I mean, what trends did you see across the petrol, diesel, and plug-in hybrids? And as a follow-up, and how did the EV values perform in all of that?
So, best performing fuel type this month was diesel. Interestingly, diesel again is in decline overall. Manufacturers are not making as many diesels. There's still a call for diesel, certainly at 3 years, and even maybe at some of the younger age points. But that increased 0.2 overall. Hybrid was the next best performing fuel type. Pure hybrid, this is, so self-charging, as one manufacturer puts it. That was flat overall. Petrol dropped just negligible 0.1%, so bang in line with the overall average. With plug-in hybrid down 0.6. EV is the one that stands out a little bit worse than, as the worst performing fuel type or drivetrain, down at 1.1% overall. But, in terms of, I guess there's probably a little bit of price pressure. Maybe that's led in from, maybe some new car availability and some strong new car offers, which ripples down into some of the older age points, certainly 2 and 3 years. But yeah, it's, but again, it's not, it doesn't stand out as being in free fall. It's just some realignment, because you can't talk about EVs as generalized. You can't generalize EVs as one talking point. There's lots and lots of moving parts of that, and obviously it's evolving. Every month, every year.
Yeah, I think you're right with that. I think when we speak, it's you've got to be very careful, haven't you? Because you can send out a negative message, and it's not all negative, is it? There is some weaknesses in there, but there's also some good value product. There's some strength in there as well, and it's a very difficult sector to just say, look, it's down by this, because there's a lot, as you say, evolving in that sector in the main.
Definitely, I think there's lots of positives. There's more and more coming back into the market. Our trade volumes of just EVs in isolation are increasing month on month, and exponentially as well. We've already seen an increase over previous months of last year, just for January. We've not even got to the end of January yet. So the good news is there's more and more coming back. Conversions seem high. It's just a little bit of pressure in terms of price point as more and more come into the market.
We'll be back after the break with more insight and analysis from CAP HPI on the January used car market.
You're listening to All the Chatter That Matters, a special weekday episode of Motor Trade Radio, powered by Motors, the driving force behind multi-site advertising.
Now, Jeremy, each month you analyse retail activity as measured by days to sell. How did they perform in January?
Pretty good. more or less in line with December. There was a little increase in December. I guess that's not a surprise to retailers or to anyone listening to this, that days in stock and days to sell will creep up slightly through what is a slower period for retail. But it's picked up a little bit throughout January, and the fastest selling fuel type is actually BEVs, and that's at 42 days. Looking at hybrids, they're slightly over. There's pure hybrid at 43, plug-in hybrids at 47, petrol's just again ahead of that at 48, and diesel being the slowest, just over 50 days at 51 days. So it's a little bit of a change, but not too much, which I think is a real positive message as well.
Yeah, and also as part of the CAP HPI editorial, you also polled the views of the auction houses. What were they telling you about stock levels and demand?
Both have increased, markedly over December, as you would expect. Increase in stock levels. I think there's been probably some injection of fresh stock coming into the market, due to some cars being changed over, whether that's part exchanges, whether there's some fleet being changed hands as well, and return keys coming back through the auction network. And again, with overall demand is really surged. I mean, our poll was 93% increase for January, and that compares to just an 8% increase in overall demand for December. So that's a big increase for January, and I guess really tells a story in terms of as retail's picked up as the months progressed, as the weather subsided a little bit. I think trade demand has just literally mirrored that within a few days.
And as always, Jeremy, I mean, we end of the month already, and as I say, we started off and how quickly January has flown. It's been a busy month, I think, but we're in this first quarter of the year now. There's a lot going on in the marketplace, and obviously the market is really trying to keep close to what's playing out, and we can't be on without get your view on how you think the market will play out as we enter February now. And I mean, you touched on it a little bit there at the start there about tends to be the value strengthen as we go into February. Are you expecting the same again as we move into further into the quarter?
Definitely. I think, that we've already started to see a slight increase. We cut off on our official deadline was Friday, finished writing the editorial a couple of days ago. We've already seen, I think the daily movement report for our live movement has already increased. That's up 0.1 already. So, there has been, I guess, almost a day on day increase, certainly from the back end of January to where we are. So February is going to be, I would say, pretty positive overall. I think the average movement's 0.3 up. I think we could exceed that. And, I don't want to say how much. I couldn't. Could it be 1%? Could it be 0.5%? I don't know. It could be somewhere between those two figures. I think the historic figures are anything 0.7, 0.1, 1%, 1.1. Most years it tends to go up. This is with plate lift excluded, obviously.
Yeah.
If you're just looking at, the true movement, it still increases. So I think it'd be anything between, where 0.5% and 1%, sticking my neck out and putting it on the line right now.
You're right. Yeah. I think you reflected it fairly accurately last time we at the end of.
Let's hope so, because otherwise I'm in for it.
Take it whilst it's hard. Take it on the back whilst it's not your way. Take the part. So I think and obviously with this, in terms of stocking trends as we move in from January into February, there. Are you expecting now retailers to sort of start out a little bit more, getting those stocking levels up a little bit as we progress through the quarter?
I think so. I think people who've held off at the back end of last year, I think the people who probably, the buyers or the dealers who stocked up in November and maybe even sort of late December are probably feeling pretty smug in terms of where pricing can go in and what they've paid, the back end of last year. Bearing in mind we're on a 1.5% drop through December, so probably feeling a little bit smug. And I think the people who've held off a little bit and will come out in January for whatever reason, and through February, there's going to be an increase, I think, in demand. We've got to remember there's not a lot of stock around anyway, and we're going to go through February in the run up to a plate change in March. So that will add, another little bit of pressure. So I think the market's heating up nicely. It's, in some areas, it's been a couple of describers been on fire, but it's definitely warming up nicely. So all the telltale signs are saying it's going to be a strong February with demand, probably increasing from here on in.
Well, we've got you recorded saying that, so we can always refer back to it if we need to, Jeremy. So I mean, yeah, I mean, as always, I mean, there is signs of optimism. There's reasons to be positive as we move through this quarter. So I think you've got that message out loud and clear. I think there is as we start to move through. So a huge thank you again for joining us today. And if anybody does want a deeper dive into the January used car trends in the editorial, which is January going into the month of February, they can check that out on cap-hpi.com website, or you can go down and check any of the team, Jeremy and the others there at Cap HPI. And I think you've shared it through your social channels this week.
Yeah, that's been shared today. And I think a few of the other team members have shared it as well. But it's on the Cap HPI website, as you said. So yeah.
Well, many thanks, Jeremy. That's all for now for this special Motor Trade Radio podcast. Thank you for listening. We're back with all the big car retailing headlines this weekend. Until then, it's goodbye from me.
And it's goodbye from him.
Thank you for listening to this special weekday Motor Trade Radio podcast. Powered by Motors, the driving force behind multi-site advertising. Philip and Curtis will be back with the week's big motor retailing headlines on Saturday. Live, on demand, wherever you are, on your podcast feed.